It's extremely difficult to make a prediction of what will happen in the year when you're trying to look out 12 months into the future. But we know one thing's for sure, 2023 is going to be wild. And what we can see right now is that the difficulties we experienced last year in 2022 are likely to be further exacerbated here 2023. Look, I want to show you something. There's much talk about recession or not. We're still trying to argue about whether we're in one. Look, I'm just going to show you what's key, what's important. Regardless of whether they label it a recession, you need to know the truth. Okay. The second thing is about Charlie Munger. We're going to look at some of the quotes that he had to say about what investing like today versus before is all about. I'm going to show you what's happening with central banks. This is important. The third thing, also, what oil is signaling about 2023. There's so much to cover in here. I've got to talk about Michael Burry, of course. That's front and center, along with the recession factor. Do not miss the information in this video. Let's begin. Now, this one was big, okay? It should be reported more, but here we are. This is directly from the Federal Reserve. Are state economic conditions a harbinger of a national recession? Well, you can look at that for yourself today. This is the State Coincident Indexes, SCI. It's provided by the Fed Bank of Philadelphia, and it tends to show us that during this period of time, there might be, in fact, an indication of recession or negative growth. Looking at this, Philadelphia Fed State Coincident Indexes, number of states with negative growth. And right there, right now, we have crossed the average threshold for this period of time. So they're signaling, in this sense, recession on. And we are now at this time, right here. Where do we see this? 2020. 2008, 2009, 2001. Go back, go back, go back. It happens every single time. So we're in that today. We can look at so many different indicators, not going to make you fall asleep during the whole period. But can we just agree that there's a lot of different stats out there that are going to show it in this regard, whether you look at it from top to bottom and left and right? You got to realize something. We had a lot of money printed. You see the quotes all the time. 40% of the total money supply was printed in the year 2020. Okay, I got it. Well, what about this? 2022 was the year that killed MMT, the science fiction fallacy of modern monetary theory. Now, there's more to it than that. I just wanted to show you it, though. Many people can argue about this. Countries with monetary sovereignty like Japan or the UK found themselves in an unprecedented turmoil created by the illusion that rising deficit and debt would never cause significant problems. It only took a few rate hikes to dismantle the illusion of perennial money printing as the solution to everything. And that's what I believe is accurate. You cannot print money to resolve your problems. What do they print money to do? Well, if you want to bring interest rates down, you have to do something called open market operations. These open market operations are basically printing money. In fact, not basically, they are printing money. That's how you get them to go down. So you have to have, at these super low rates, you have to have money printing taking place. When you print money, you effectively dilute the pool of currency that's out there at this time. So you create this inflation. You are doing so intentionally. And that creates problems for the middle class. Homes go berserk in price. Why is this happening? Why can you go to a place, a regular average home, regular average household income, and the two are completely out of whack? It should never be like that, and it has to be restored. Everything always reverts to the mean. That is a fact. You do get some variances here and there, but this is what happens time and time again. Look at what Michael Burry had to say. You may have seen this tweet already. I just want to show it to you. I think it is important as we move through the cycle. These are cycles, economic cycles. Inflation peaked, but it is not the last peak of this cycle. We are likely to see CPI lower, possibly negative, in the second half of 2023. And the US is in recession by any definition. Fed will cut interest rates he's referring to, and the government will stimulate. That means they're going to have some fancy packages that they'll create, and they'll give money to people and give money to businesses. And we will have another inflation spike It's not hard. He makes an interesting prediction for 2023. I wanted to bring that to you, and you let me know in the comments what you believe is accurate. You see it through the cycle, you see the way it goes, but the government does not want to allow deflation to happen. In fact, if you remember the most important speech we have ever seen out of the Federal Reserve, I've shown it countless times here on this channel, and that is from Ben Bernanke back in 2002, when he said, deflation, making sure it doesn't happen. He literally talked about devaluing the currency as much as 40%, referencing a previous instance, 1933, where they did so, saying, we'll do that again. So you can imagine what we're in store for today. It's a very different world than in 1933. Let me tell you, okay? Look at this. It might be a new year, but not everyone is excited for what 2023 may bring. Stocks are down, economic growth seems to be slowing, and inflation remains rampant. Then we have Charlie Munger suggesting that we should in fact be more content with our current situation. Quote, people are less happy about the state of affairs than they were when things were way tougher. It's weird for somebody my age because I was in the middle of the Great Depression when the hardship was unbelievable. So yes, we need to realize that there's a lot of safety nets, there's a lot of insurance, there's a lot of things that we just don't have, we didn't have way back. No doubt. What that doesn't mean that people should be unprepared and people should take maximum risk. We need to be wise, we need to be prudent, and we need to focus on our goals. Really important, right? Big banks are predicting that an economic downturn is fast approaching. More than 2/3 of economists at 23 large financial institutions that do business directly with the Fed are betting that the US will have a recession in 2023. Others predicting recession in 2024. It's weird because of the way that they're cutting right now or attempting to cut. The expectation is in 2023. So we'll see what happens. It's when they start cutting that they're basically admitting that there is a recession. We got to know that, okay? That's the way the cycle works. So they mention all the big banks here. Yes, it's Barclays, it's Bank of America, TD, UBS, and so on. They're predicting this. And they say this, why? Because the Federal Reserve is increasing interest rates, and that tightening cycle generates a tough time. Harder economy, harder to loan money out, more expensive, and so on. This is a chart form you can see on the left-hand side. The quote is, we expect a downturn in global GDP growth in 2023, led by recessions in both the US and the Eurozone. Steering into recession is what they called this. And that's kind of what they're trying to say, is that they're blaming the Fed. Are they blaming the Fed for raising interest rates? Or should we be blaming the Fed for bringing them down to zero for so long? That's what's lost in translation here. And that's why you're coming to me to bring out the truth and to say the things that the news media won't. If you're in recovery mode, financial advisors say the best thing to do in 2023 is to forget about the next best thing, go back to the basics. And I do agree with that. You can argue with what they say is back to the basics, but I do believe in that. We shouldn't get all this wild and crazy type investments. We should stick to what we know is solid. Quote, the new year is almost certain to bring economic twists and turns. My advice, while it may sound boring to some, is to keep your finances simple. Stick with time-tested fundamentals like budgeting and saving, investing for the long term, and diversifying your portfolio. Those lines right there, they're time-tested, let's say, but there's much more to it than that. Come on. Okay, and we'll talk about that. What are the central banks doing? Bank of Korea pledges coordination to soften economic landing, saying that they got to make sure that we are going to do what all of the rest do, and that is cut when it's necessary, tighten when the inflation comes through. Look at one example. Indonesia's inflation beats highest forecast in challenge to rate outlook. So while they thought it was going to be one direction, it was going to be high, it ended up being higher. As a result, they can't, start to cut interest rates like some of these others are going to do and have done. No, they need to keep them up. And that means slower growth. That means a slower economy in general. And then this one, a funny one. Well, maybe it's funny to me. Bank robberies fell to zero for the first time in cashless Denmark. Nobody's robbing the banks because there's no cash to steal. So the problem with this is that it's not as if they're not stealing cash, they're just doing it through other means. Okay, but Denmark going through this cashless society, and it's important. It's important because it changes the way that people do business. It changes a lot of things, in fact, and I do believe that most economies will go in the same direction. Cashless society brings a lot more scrutiny, and it's, in my opinion, not necessarily more secure, though I do understand why businesses would want this. Look here. When inflation is rising, it can be a sign of economic strain, as it may indicate that the supply of money is outpacing economic growth. This can lead to a recession, which is a period of economic contraction. One example of a difficult economic time with inflation is the stagflation of the 1970s. During this period, the global economy experienced both high inflation and slow economic growth. This led to a challenging environment for businesses and workers as costs were rising while demand for goods and services was stagnant. Unemployment and bankruptcy rates also tended to be higher during recessions. The way governments and central banks will deal with the crisis is with monetary and fiscal policy in order to try to avoid the recession and mitigate their impact when they do occur. This always includes measures such as lowering interest rates to encourage borrowing and investing, or implementing fiscal policies such as increasing government spending or cutting taxes. Of course, this perpetuates the cycle even further. In the end, more inflation should be expected, so prepare accordingly. That's really key to know during these times, because many people, they don't get it. They don't understand the way the cycle works and operates. Look here. The oil market crisis sparked by Russia's invasion is nearing its end. Prices have come down. We've seen natural gas come down. We've looked at this. A lot of the commodities that were super hot initially earlier in 2022 are now coming down to earth. So watch those very closely. This is important because a lot of it is based on speculation. It's not necessarily based on the fundamentals. It usually overreacts on the way up and it overreacts on the way down. Then I wanted to show you this because China is an important part when we look at oil, when we look at other commodities. They have this voracious appetite, but things have changed. First things first, look at the chart. You could see China's crude imports, million barrels per day. Since 2020, it has been trending downward. They have been locked down. They're not using as much energy. As a result, you could see that they've come way off of their peak usage. And that has an impact on the exporting countries because China's not buying as much anymore. China yuan denominated Russia crude rivals Saudi imports. In 2021, China imported nearly 80 million tons of crude from Russia versus 87 million tons from Saudi Arabia. These two producers respectively accounted for 15% and 17% of China's total crude imports, which was near Saudi Arabia's total 2021 output of 550 million tons. At present demand, China is both Saudi Arabia and Russia's top energy consumer. Huge, right? This is massive. To understand that China is the buyer, they love, no wonder Saudi is saying, hey China, you're my friend, let's do business. They're doing so well together as partners in this way. So watch these alliances. Watch what happens in 2023 as they strengthen their bond together. We know China and Russia already, but Saudi Arabia, that's the key one because that is the petrodollar at stake. Your entire investment strategy can be shaken. And that's something that you got to watch out. Okay? What happens with the US dollar? What happens with that petrodollar? Look at China. Look at how much they're importing. Watch what happens with Taiwan. There's a lot to cover here. I brought you this video today and I'm going to bring you another one tomorrow. All you got to do is hit that subscribe button right down there. Don't forget, it's right there. Hit that. I'll see you tomorrow. Take care.